Hi, I'm Sharon Landon, the Managing Director of Cross Cultural Interchange, and welcome back to ITV Asia. Our program focuses on executive women in China. And here with me today is Shirley Yeung. She's the founder and Managing Director of Dragon Rise Capital Group, which is a boutique investment advisory firm with offices here in Shanghai as well as in Hong Kong. Shirley, thank you for coming in today.
My pleasure.
Okay. Now, I just want to talk a little bit about your background. Now, you were born in China, and then you went abroad to study. Can you tell me a little bit about that?
Okay. Well, I was born in Guangdong, and I finished college in Beijing when I was rather young. I was 20, and then I went abroad to study for my MBA.
Okay.
I graduated from Yale School of Management with a concentration in finance in 1993.
Okay. Well, I know in China that a lot of parents put pressure on their kids in regards to what fields and things like that they get into. Was finance something that you were interested in yourself, or was it something that they had said, Shirley, this is something that we want you to get into because there's money in it, or...
I think like all the rest of the Chinese parents, my parents wanted me to be a doctor, which I hated.
Okay.
I think choosing a major in finance was actually my rebellion.
Oh, okay.
Yeah.
Right. So then after you got your MBA from Yale, that's in Connecticut. Did you? I know you went to New York. Was that an immediate thing right after graduation, or how did you come to working in New York?
Yes. I was hired by Nanex, the holding company for Nanex Telephone. They're headquartered in New York City. I started with Nanex, a mergers acquisitions group, working on some international M&A projects. A year afterwards, they gave me $1 billion. They gave me a big job. They hired me for the Nanex Asset Management Group that manages $25 billion in pension assets.
Okay.
So I was hired to be the international equity manager, and I got really cushy office in my life building, overlooking the Hudson River.
Wait a minute, you got $1 billion for yourself? What was what you? Okay, you were.
The pension fund portfolio.
Okay.
But I was put in charge of that. Yeah, a year after I got out of grad school. So it was a big responsibility, but I was too young to be afraid.
Okay. Now look where you are now with your own company. Right. So after New York then, I know you've had quite a few years of experience now in investment banking, management, and also venture capital. And your industry experience is in telecom, media, and technology. Is this field that you're in, finance or actually this investment field, I think previously or it's generally more male dominated.
It still is.
It still is. So was for you as a woman, was it hard getting in? Did you have some hurdles that you have to cross or
Not in particularly. I guess maybe because I didn't really think about it too hard when I started out.
Yeah, you're too young to.
But I did remember the second year I was at Yale School of Management. I took the M&A course, which was taught by Professor Roger Ibbotson. He's very famous. There were only 5 women in a class of 75 students. So I did notice I was a real minority, and I really did not have a whole lot of female peers to talk to. At the time, I didn't really quite recognize it as a hurdle. I just didn't, put it into perspective. In retrospect, I think it would have been a lot easier to have, female as your peers, or especially people who can coach you as a female in the working place. But luckily, as you said, I was young enough, didn't really think too much, just forged ahead and took out whatever opportunities I could get.
Okay, so I guess did you feel that you had to work harder in your very first working experience and stuff compared to your male colleagues or anything in regards to making yourself?
That's very true. I think part of it was self-driven, not because I thought I needed to work harder, but I just worked harder. And I think most of my working life I've worked very hard, and harder than most people around me.
Right.
Without appearing to do so.
Well, that's always the trick, isn't it?
So some friends would, somehow thought, I succeeded, quite easily, which is totally the opposite. Yeah.
Okay, so it seems like you have a very natural talent, but you really had to climb that ladder and work really, really hard.
Well, I burn a lot of night oil when people are not seeing me.
Okay, right.
Yeah, put on enough makeup so that people don't know I spend the night working. Just kidding.
Well, it's a good thing that we're able to wear makeup. Okay, now then, from New York, you ended up moving to Hong Kong, right?
Yeah.
Now, my question to you is that in 1997 is when you actually made the move. During that time was the turnover year from Hong Kong to China, and a lot of people have been moving out of Hong Kong. What was it that made you, move there, and Hong Kong rather than back to China?
It was more economical reasons, market-driven, personal economic reasons. Partly was because my husband got transferred.
Okay.
And then that was my fourth year with Nanex Asset Management Company. At that point of time, I was managing $3.5 billion globally. So I had management responsibility for the entire non-U.S. equity portfolio. And I was traveling around the world. It was actually really enjoying the work. But then, because for family reasons, I decided to accept the offer from J.P. Morgan to join its equity capital markets team in Hong Kong. And that's why I moved back. Luckily, in Hong Kong, it was a booming year for the capital markets. It was called Red Chip Boom, if you remember. Yeah.
Well, I'm not exactly sure. What is that? Because I'm not in that industry.
At the time, there were a lot of, it was a big wave of a lot of Chinese companies getting listed in Hong Kong.
Okay.
Yeah, and so the markets were booming. There were a lot of IPOs, a lot of deals getting done, in the banking industry. Yeah, so I joined, J.P. Morgan Hong Kong office at a very good time.
Okay, well, interesting. So it's
I was actually at one of the handover celebrations. So
Oh.
it was very memorable.
Okay. So did your husband also have a position in Hong Kong? That this is the reason why you guys moved over as well, right?
We moved together.
Okay.
We got lucky because both of us got transferred with work.
And moving from New York, I know you were responsible for a lot of the Asian portfolios and that kind of stuff. Was there any difference going into the Hong Kong market from the New York? I mean, you're both American companies, I guess, so there's not too much of a corporate culture difference. But
I think that's a very good question because, indeed, my experience as a global investor on behalf of one of the largest pension funds in the U.S., because NYNEX pension fund was a top 10 corporate pension funds in the U.S. So I was able to gain a very global investment perspective. And I was one of the largest institutional investors. So moving to Hong Kong, to the south side, where, on the investment side, we call it buy side, right? So moving to the south side, having had a global buy side experience was extremely helpful. Because when I went to talk to the Hong Kong-based clients, corporates, I was able to give them the New York view. How an institutional investor or investors based in Europe or in America would view Asian companies. I think that was very helpful.
okay, so that was a plus in your book or for your clients and stuff. Okay, very interesting.
And most of my peers do not, have that kind of experience. So for me, that's definitely a value add for my career or just my interaction in terms of my daily work with interacting with the clients.
Right, and also, I mean, you were very young. You still are very young, but to have a lot of that experience coming with you, I'm sure it's a part of the measure of your success.
Well, the good things, because I was too young, I didn't feel that I should be too proud of myself.
Okay, there's a good piece to be
I
said
was
for
still
being
learning, especially,
Right.
I was making a very big change.
Mm-hmm.
Normally people go from sell side to buy side, but I went from buy side to sell side.
Okay. Well, interesting. Now, how long did you stay with J.P. Morgan?
3 years.
3 years. And then you, I believe, started working for another company, a very famous family in Hong Kong, I believe.
Yeah, I was approached by the then it was called the Pacific Century Cyberworks, owned by Mr. Richard Lee, and I joined the company in March 2003.
And for working for that family, and was there any differences in how you had to invest? What were your responsibilities for that compared to J.P. Morgan?
I joined their venture investments group as a head of China investments. Immediately, this was the first internet boom.
Excuse me.
The year 2000. I may have said I joined them in 2003, but I joined them in March year 2000. At the time, the market was extremely hectic. Basically, the company or the group of venture investment professionals were almost like doing one deal per week.
Wow.
So it was a very hectic schedule, and they had a lot of money raised from the market, and people were busy putting money to work, but not just this company, this team, but almost the entire venture investment world were pretty frantic working on deals. So it was that kind of environment. I left the banking to join because I initially thought I was going back to the buy side, but turned out to be busier than the sell side.
Oh, no.
I was expecting to work less.
Right. I got it. But it didn't happen that way. Okay, so.
Not, yeah.
So PCCW Ventures is Mr. Lee's company. Now, you said you ended up working a lot harder. I mean, did they focus on particular companies or particular investments?
It was the ventures team then was built upon the assumption that they will mainly focus on TNT investments, which happened to be my familiar area or territory because it's a jargon we use for telecom media technologies. We were looking for deals in that sector, in particular, with the purpose of helping to build the now TV network that Mr. Lee envisioned. So initially, that was what the venture group set out to do.
I know the Lee families has been in the news quite a bit. Did they take any more extra risks that most major companies like J.P. Morgan? I know there's always risk involved in investment and things like that. Did they do anything extraordinarily risky as a part of their success, or it was just because of the market, as you mentioned, and what they invested in and whatnot? That was really the.
I think I wouldn't say they have taken on extra risks. I think at the time, market was so hectic.
Okay, so.
And it was very new. Internet, this is like Web 1, era where everything was new. And during that time, the venture group invested in Sohu.com, CNOT.com,
Okay.
and Tencent Technologies. All of them are highly successful these days. So I do think the group did some good deals. But then we also splurged on some deals that turned out to be not so great. And but this is all part of the game at the time,
Right.
because even some very well-known Wall Street analysts were writing up on us on what we did, even though to a certain extent I personally didn't quite understand what we're trying to do. But it's not because of the group or the fund, but mainly because of why everybody in the market was so crazy about eyeballs, for instance. Because I was trained in finance, definitely I could not quantify a lot of the phenomenon and high valuations in the market. Because most of the companies that approached me for funding started out with a blank, sheet of paper. Of course, they had a business plan. Probably they had a internet model, and they would ask for $40 million US in valuation. without a dime of revenue. That was the norm of the times.
Really? Okay. So I guess you
That's
guys turned
especially
quite a
these
few
days.
down.
A lot of them, including some of the now successful companies.
Mm-hmm. Oh, really?
I wouldn't name them.
Ah, okay. Well, we don't go too much more into that then. So, what was then with the PCCW Venture Group? What's the biggest project or investment that you guys worked on when you were with them?
I was mainly focusing on China investments at the time, so spent a majority of my time traveling in China in a lot of cities looking at potential investment projects. So in retrospect, the most successful deals were Tencent Technologies, which is now approaching $7 billion U.S. market cap. It's listed in the Hong Kong Stock Exchange. But we did sell out earlier. We sold it to a South African investor group called MH. But we made 8 to 10 times on that investment.
Okay.
So that's probably the most memorable deal for the group. And then we took a pretty large bet in Sohu. We also sold out early. Part of the reason was because a year after we put money to work, the internet boom kind of busted.
Oh, okay.
And then the company successfully acquired Hong Kong Telecom, as you remember. It was almost the largest LBO deal in the market. And there's a lot of pressure on the senior management about consolidating these smaller investments and focusing on the core telecom business. By then, the company was, changing into a telecom company instead of an internet investment group.
Okay. Now, I mean, with all the experience that you had with the companies that you've been working for, now you moved to Shanghai, I believe, in 2003, right? And you made this major decision to go out on your own. What were some of the reasons behind you striking out on your own?
The move again was triggered by family reasons.
Okay.
My husband got transferred again, this time to Shanghai. So we had a serious discussion and decided, because we have two children, and we decided it's best that if I can move as well. So I had discussion with, the seniors at PCCW, and it was felt that since the focus then was more on telecom and telecom value add type of investment projects or M&As, and the focus of the activities will be more in Beijing than Shanghai. So, we both decided that, Shirley deserves a break. That's how I put it.
Okay.
So I tendered my resignation and moved to Shanghai with the family. And because by that time, I have tried banking. I've done, institutional investments in public market, and I've done venture investments in the heydays. And to me, it was a time looking for something new. And I didn't quite find it at the time. And then it was at the encouragement of some friends that I knew in Shanghai in the venture community. I started advising some startups and entrepreneurs, including the now highly successful Focus Media.
Okay. So, I mean, we'll come back to Focus Media in a little bit, but in opening or working on your own, did you find that you were are you able to, control some of the time that you had to I guess all the overtime and things that you had to work when you were within those firms and stuff? Are you able to manage that now a little bit better, or is it still kind of crazy? Because I know you're always really super busy whenever I'm contacting you.
I think pace-wise, it's still very hectic. But you're right. Now I'm able to control my own time and scheduling better. It's because if I really have to go to my son's school meeting, for instance, I'll make the time, because now I can ask my colleague to go to a meeting, or actually just rescheduling a meeting with a client. So from that perspective, there's a lot of advantages for a woman like myself to be able to juggle between family responsibilities and my, work or my responsibility towards my clients.
Okay. So we mentioned Focus Media a little while ago. With your company, are there things that you actually focus on within the China market? And do you work mostly with Chinese companies, or do you work with overseas firms, or what is it that?
I work with both.
Mm-hmm.
But nowadays, I found myself increasingly spending more time with the local entrepreneurs, because it's the local entrepreneurs or startups that are really in need of my skill sets.
Mm-hmm.
Because I brought with me over 10 years of experience in not just banking, but also investments.
Mm-hmm.
And investments, as I said, a global institutional investor in New York. And then venture investment experience was when I was based in Hong Kong,
Mm-hmm.
and then banking experience.
Right.
So probably there's not too many people like myself who kind of work at a round table in one big finance field,
right,
or financing field. So that was very helpful to the companies I was working with.
Mm-hmm.
I will be able to assess the deal not just from whether or not they will be able to get financed, but whether or not, in 3 to 5 years' time, it can or should go IPO, and how a investor in Hong Kong, especially in U.S. or even Europe,
Mm-hmm.
are going to view this particular company. Whether from management perspective or from the investment theme or technology, etc.
Okay. Now, back to Focus Media again. I know this is one of the projects you're working on. Can you tell us a little bit about that? And I know you're pretty proud of this project. So,
Well, a friend who made some initial investments into Focus Media introduced me to the founder, Jason Yeung. And so I went over to meet him
mm-hmm.
and asked him to do presentation and discuss what he's been doing. The company was just 6 months old at the time when I met the founder.
Mm-hmm.
He was and still is very bright, very young, although he looked much more mature than his age. So he told me about this, theme and idea about putting up LED screens next to the elevator, and
mm-hmm.
to utilize the idle time of the elevator waiters,
right.
who tend to be, in the higher income bracket in China's white collar, segment.
Mm-hmm. I know I see those LCD machines everywhere now.
Well, I think a lot of people did not understand at that
mm-hmm.
point in time, and I liked it. I liked it. I remember the first thing I said, "Wow, Jason, I didn't know how to call this. Let's call it new media." But if you can tell me you can be number one in China, the China markets are so huge that I'm sure there will be money to be made. But we need to figure out how large the addressable market is, and then how scalable the model is. And that's when I decided that this is a project that we could take on. Because now
I believe you said Focus Media is listed on the NASDAQ, right? At this point,
it's about as of yesterday, I think it's probably $4.3 billion USD market cap. Yeah.
Great. Well, that's a great thing under your belt, or on your list of accomplishments, because I mean, I'm looking at some of the things that you have, and it doesn't seem that you've had any free time, after starting your own company.
I'm a very efficient person.
Okay. Well, I guess that's really the key. In regards to the marketplace in investments and things, what do you see as a trend, or is there any trends in this area? Because I know there's a lot of money coming into China, a lot of money going out. Is there a market trend, or what people should look for when they're looking to invest in China? Or
I think nowadays that probably for venture capitalists, the private equity funds, I think that we're seeing kind of the second big wave happening in the China market. 6 years ago, when I was making VC investments in China, there were not a whole lot of private companies that were profitable. it was very difficult to find deals that were already making money in the private sector, especially on the tech side. Now I think that there are a lot of them. There are a lot of very good companies. They may not have the most advanced technology yet, but on the application side, in terms of the commercial applications, they are really, getting there. Or some of the companies started, say, 5-6 years ago, like Baidu. It is now finally extremely successful.
Right.
Yeah. So also now there are a lot more capital focusing on late-stage deals, meaning the companies that are already profitable, which is because what I mentioned that now there are actually a critical mass of Chinese private companies that are doing very well, attracting later-stage funds or companies to invest in them.
Okay, so the timing is ripe then for people that want to invest in Chinese companies, and it's a good time to be here in China. And
Absolutely.
having your company started, and I do wish you good luck. I thank you very much for coming to talk with us today, and thank you for watching. We'll be back.